I've been doing some research on the S&P 500, trying to work out if there's any indications that we are at a bottom. And I threw up my OGT GMMA indicator, which I'll go through in a second. And I've noticed something on the last three dips that are over 10% plus, and I want to walk you through that in this particular video because I think we are at that situation now currently on the S&P 500. So we are looking at the SPY, which is an S&P 500 ETF tracker. We are on the monthly chart. Now, what the OGT GMMA indicator does, and it's absolutely free. Unfortunately, it's not added on to TradingView because TradingView have deemed this not a unique enough indicator. There are other GMMA indicators out there, but the source code is down below, and all you need to do is just go into the Pine editor, open the notepad file, and paste it in and save it or add it to your chart to get this indicator. Again, it's absolutely free. The source code is down below. And this indicator or this theory was created by Daryl Guppy, which is why it's called the Guppy Multiple Moving Average Indicator. And it's a set of what he calls short-term trader momentum, which are short-term moving averages, and long-term momentum or long-term momentum traders or investors by slower, longer-term moving averages. And the way it works is when all the MAs are aligned, we see green, and it's light green for the short term, dark green for the long term. If they are aligned in a downtrend, there'll be light red and dark red, which I think I can go back down to the financial crisis of 2008. You can see the dark for the long term, light for the short term. And when the MAs are kind of tangled up or in a range and they're not in one particular direction, it is a yellow for the short term and blue for the long term to signify there is no clear trend in the market. And what I've done is I've had a look at the last three areas, which was back in 2018, obviously the pandemic crash of 2020, and where we are year to date, of where we have dropped at least 10% or more in the S&P. And what I've noticed is I've noticed a pattern for recoveries, especially the last two. And the pattern falls as follows. So firstly, what we have is the short-term moving average band is yellow, which this is signified by the one in the 2018 drop. So we've got that situation there. We then have price closing in the long-term moving averages. So this red bar here, number two, you can see the close is within the long-term moving averages. And then what we get preceding that is price closed outside of the long-term MAs. And what you can see here is the month after price is used as a resistance, and it jumps out and closes above the long-term moving average. And then whether it's 1 month, in this case it was 1 month, but in this example it's 2 months, where the short-term MA band then turns green, and then you see us, rise up there, for the rest of the year. Again, very, very similar pattern you can see here. You can see that the short-term MAs are yellow. We then have a close, even we penetrate below, obviously, but it didn't, but we closed inside the MA bands. We then have a bar, the next bar preceding closes outside the MA band, and then 1 or 2 months later, we then have the green short-term band then start turning red. And we have the same situation over here, where we have currently, we have the short-term MA band is yellow. We now have a close below back in June inside the green MA, the green long-term MA, and currently there's a few days left. I think it's the last trading day or two last trading days, shooting this on the Thursday, we are currently above the long-term MAs, as you can signify here in point 3. Now, if we close above the long-term moving averages, what we want to see here, if history is any repeat, we then want to see the market move higher and for the short-term MAs to go green. If we see that, then in my personal opinion, that is a bullish sign that we want to start progressing higher, because we've seen it the last 2 times, and again, it may not happen, but there's a strong indication that if we get that green bullish bar, if for anyone who's sitting in cash at the moment, might want to start looking at this in a bit more detail. The reason why this, in my view, is a kind of false signal is because we're too far away from the long-term MAs. In both of these scenarios, we do have closes inside the long-term moving averages, and now we're starting to jump out the long-term moving average. So, again, this is something that, in my opinion, that is a bullish sign. I do think we will close. I know we've got Apple earnings coming up today, which could potentially be a big movement of the market. So we need to watch out for that. So again, if we don't close below here and we stay within the long-term moving band, what we're looking for is a close outside. If we continue to get movement down, then we can start seeing things of what happened inside 2008, and I think in 2000 inside the dot-com bubble. We'll get those. So if I kind of scroll out slightly here, these are the times here where we then have this dark green, the long-term moving averages turning red, and I don't think it turned red in 2000, it turned blue. But if we start getting red on the short-term moving averages, we are in trouble. So that's not what we want to see. We want to see these short-term MAs, which are currently yellow, turn back green to give us momentum on the upside. So again, download the indicators, it's absolutely free. You've got some additional videos on here of my other indicators and other thoughts about options trading. Like, subscribe, and I shall see you guys in the next video.